Hello, everyone. This is Noah and John, and it is Friday. So you're going to get your weekly Manhattan market update. John, let's get right to it. I'm looking at supply. I feel like we're stuck in a time shift or something here. 7,033. We're not going anywhere. Show me that chart.
Yeah, it's 7,033 on the dot, and we are not going anywhere. This is the fourth week in a row in which it's been 7,0 something something in terms of what supply is. And we're basically just right at a plateau here.
And stuff has been coming on the market. It is the listing season. So this, the reason is pending sales. The demand is just off the charts. Let's shift to pending sales. We broke the four handle. You can see I got a little pep in my step over here. I can't believe it. 4,036. John, show me that chart.
Yeah, I mean, we've crossed the four handle, which is amazing. We haven't done that in, frankly, I don't know when we've ever done that before. We talked about it last week, but it's an amazing number, and it's up again this week from last week.
Yeah, and I have a theory on this, and we're going to get to this at the very end that may explain some of this. In the meantime, the market pulse is just shooting higher. Let's go to the weeklies. I'm looking at weekly supply, came in at 383. That is drifting lower. That is not what you want to see during the listing season, but for perspective, Johnny, show me that chart.
Yeah, we're down on a weekly basis. This is the time when spring break starts. You have a lot of schools on spring break this week, next week, so that could have something to do with it. But I mean, listen, for getting into the swing of active season, you would think that this number would be going flat or ticking higher. But here we are, another week, another kind of drop in new actives.
Yeah. All right. And 1 week is not a trend make, but now this is 2 weeks. So we're starting to get there. It's a little early. Let's go to contract sign before we overanalyze that. And that came in at 341. Unbelievable. It keeps going higher. John, show me that chart.
You're right. 341 is another 4% more than last week, which is already at 328. So every week we've seen in March has been over 300. I think this March is going to be the highest number, the highest month in terms of contract signs that we have seen since forever.
Yeah, a long time. We don't even know when. We didn't research it before that, so you can tell this is a raw take. And this is why the market pulse is going up. I would not be surprised if you wake up one day and this neutral market is no longer a neutral market. We might be inching towards seller's market territory, which is the low end of that, which is just incredible. And I want to bring out a note here. I got the 1 month. I look at 1 month supply. We're at 1636. That's not bad. Like that's a lot of stuff coming on the market. And the point is it's really a demand situation going on right now. It's really quite incredible to see it come back. But let's shift, John.
If I can just make one point, if you just go back to the monthly ticker, I just want to make one point, which is if you look at supply 1636, then you subtract the contracts 1284, then you subtract what's coming off market. We're negative. Here we are, the peak of the active season, and units are leaving the market more than they're coming on. So that has a lot to sort of explain.
Yeah, that's why supply is like not going up. That's exactly what is going on. Yeah, that's the formula. Yeah, so I think the main point here, John, is that liquidity has returned. Price action, not so much. I mean, we're off our lows. We talked about that a number of times. I don't want to get into this. We talked about where the market is in terms of negotiability and discounts. I don't want to talk about that. But I do want to just compare some broad metrics here, John. This is Manhattan. This is a quarterly market report. I'm sorry, a quarterly market take back to January 2015. So a lot of data, right? And the bottom bars are your pulse. That's our pulse. Right. That's your real-time leverage in the market. And the green line here is your price per square foot. And the main point I wanted to bring here is that the liquidity, the bottom bar is your liquidity, that has returned, all right, to levels that are definitely within the realm of normalcy, that's for sure. So the market is back, and prices are just kind of off their lows. This has not done anything dramatic as of yet. So that was the point of this chart, right? Before I move on, do you want to say anything here?
No, I think you're right. And it's one of these things where we haven't done a full deep dive into this, but generally speaking, activity leads prices. So the first thing you're going to see for any sort of price rebound is the activity coming back, and we've sort of seen that. So,
and that's exactly why we're talking about this. Right, that's exactly why we're talking about this. Now let's shift to the rental market. Right, this is the same concept, going back quarterly, going way back to 2015. The bars are the pulse of the rental market, the liquidity, right, the activity. And then the red line is last ask median rents, right? That's all I got. I don't have concession information. I don't have signed information. You got to work with what you got. So when I look at this, and let me just delete that, you could see the return of liquidity right? Again, to very decent levels here, but prices are down. And again, the main theme is that liquidity is back, but the prices are just kind of, as far as sales, off their lows. In terms of rents, it looks like they're still trying to find a bottom.
Yeah, well, I think it's the decrease in prices that's driving both the rentals and the sales market. I think in the sales market, I think there's an idea, number one, that, hey, there might be some deals here, let's jump at them. And number two, interest rates are cheap. Hey, money's free, let's go. Same thing on the rental side. I mean, rentals and concessions got to a point where deals were too good to pass up for a lot of folks. And the fact that I think we did over 1,000 rental deals last week, which is an amazing number. It's something you normally see July, August at the peak of things, and we're doing it in March.
The
rational behavior here.
Yeah, exactly. And my theory is let's end it here, right? So now here's my theory. All right, let's get deep here, right? So we did this chart a while ago. Let's go back to it. This is looking at how many contracts we signed. This is the sales market, right? How many contracts we signed going way back to 2007, okay? And there's a couple of things that I want to point out on this chart. Let me go change the color of my marker here, right? You could see COVID. That is COVID, right? And COVID came in at a much lower level, and you can see what's going on there. Now, before we go further, let's take all of this good data. We got a lot of bars of data, and let's look at the numbers, and let's come up with like a normal. Let's go up with the normal, right? Like I see 13,000 here. That's not normal, right? I see 12,000 here. That's on the high side. 12,000, 11,000. That's on the high side. Then I see 96, 98, 10, 10, 10, 10s. Like, could we just agree that maybe like 10 or something along the lines of right around here, 10 and a half is kind of like a good norm for all of that?
I will agree with you.
Okay, where thereabouts, done. Right? So COVID, okay, bear with me. We didn't have a normal season, right? So let's say we're below the norm. Let's say this 10 and a half. So that's around 3,000 plus units that we missed out on. Okay, we missed out on. Okay. Now, here we are in 2021. We already did 3,267 deals. We're almost close to half of last year's production. And we're only on day like 84 of a full calendar year. So John, you did this, you annualized this. You said, well, if we keep this up at this level, it's going to give us some crazy number of 14,157. That's not going to happen because we're not going to keep this sustainable level at. But it's very possible that the 3,000 we missed here, this 3,000 is now coming back on top of normal inventory of 10,000, and we might get close to this number. And that's the argument here. We might have in 2021, you might see a total somewhere close to 2007 in the 12, 13 mark, which is the norm, plus the missed out 2021 deal volume that's carrying over. And we're seeing it play out in real time.
No, it's a good take. And I would have been really skeptical, but the fact that we have seen over 300 deals signed every week of March, and we're now 9-10 months past the lockdown. So, I mean, everything's open. The market's been open. So all of that lockdown stuff is it's in the rear view mirror and it's fading fast. So, if you'd asked me in December or January, even when the market was looking great, are we going to have a year that's going to be on par for one of the peak years? I would have said, no, it's will most likely be 11, 13, 14, somewhere in there, like not peak, but getting up there. But my goodness sakes, there's nothing to stop us from accomplishing over 40,000. I would not be surprised if it happened. I don't think it will, but I wouldn't be surprised if it did.
Yeah, and again, I don't think it's going to sustain, but I think the argument is we're going to have close to a 2007 year, especially as you see the tentacles of the depth of the buyers from Manhattan start to come back online. We're still not at full capacity. So we still need to get to full capacity, and that's going to take a lot of time. So crazy stuff going on here, John. Crazy
stuff. And I will say this, if we continue on this current trajectory, we're going to have a supply issue, and that could really impact the markets going forward. So, yes, the deal volume right now is fantastic, but we have that supply coming on to sort of, keep it going. If that supply starts falling off and deals keep happening at this pace, we could find ourselves in the point where there's just nothing there to sort of, running on fumes kind of thing.
Yeah, and that's why we got to watch this number. The fact that this number is going down right here on a weekly, that's not what you want to see right now. If that keeps going, and that monthly number goes down, you're right. This could over time bring that inventory down into the 6s or 5s and become an inventory problem. It hasn't happened yet, but you're looking around the corner and I see where you're coming at. Amazing stuff. Thank you, John Walkup. I am Noah Rosenblatt. We are both from UrbanDigs. If you got questions, we got answers. Visit our forum right down here. Other than that, have a great weekend, and we'll catch you next time.